little glare.
A little bit. Not too bad. I think it'll change.
That's worse.
With the sun.
That's better right there.
Yeah. It's your time to shine.
Yeah.
You ready?
All right, you guys ready? All right, let's have to pray the whole domino system of the technology being used doesn't just all fall apart on me now. We'll wing it if it does. I feel so much more official than this really needs to be. We do this class once a month, intro to Bitcoin, followed by a Q&A. Q&A, what I really think is the most valuable part of the presentation. That's gives you the ability to directly have your questions answered. We've all, most of us had gone on YouTube, maybe watched a few videos. That's well and all, but you have so many more questions that, you know, every fact you find out opens up more questions. And it's not, I find that a dialogue is so much more valuable. That's why we wanted to start doing this, and hopefully it brings some value to you guys. Speak that much louder. Okay. All right. So what we want to do is, you see the title, Cryptocurrency Demystified. We want to start to take some of these concepts that are foreign and terminology that's new, and just start to break them down and explain in human terms some of these definitions and concepts. So I have a couple different videos in the presentation. I really like, I added them. I think they really kind of illustrate. I start the first one, so it kind of starts that prompting of questions and throws out a few facts, and then go right into the presentation. So hopefully, I'll need to get the volume here. Hopefully this is loud enough. Go ahead, I'll see how loud it is.
In order to understand Bitcoin's potential to revolutionize the global financial system, we must first understand what it is and why it matters.
Bitcoin is kind of like email for money, right? If you remember, we used to write letters, now we do email. We used to, read the newspaper, now we read content online like emailing. So Bitcoin is the next evolution of financial services.
Ask yourself, which is more important in your life, money or email? And I think most people will say money, so this is bigger than email.
The short version of what is Bitcoin is cash for the internet.
But Bitcoin is the most important invention, at least since the internet.
Bitcoin has a fixed money supply, which appeals to a lot of people who believe that central banks creating money whenever they feel like it is a really bad idea.
You think about the average business that's accepting PayPal or credit card on the internet,
they're paying roughly 2.7% to do that. And just even chopping that down to what a company like Coinbase offers at the moment, 1% costs, is a significant cost saving. Let's say you're a 5% margin business, all of a sudden you're saving 2% on credit card processing costs. That's 40% to your bottom line, which is very non-negligible.
There's going to be amazing new ways that people use money that people can't even imagine now, because when the internet came out, people couldn't imagine all the different things that people do.
The value of anything, whether it's dollars or gold and silver or Bitcoin, comes from the value that people ascribe to it in their minds. So if people believe something is valuable, that's where the value comes from. It's not an intrinsic property of a dollar bill or a piece of gold. It's because people believe it's valuable.
Hopefully they'll appreciate the risks that we're taking to make it happen in the early days, because most people just laugh at it right now.
That says gold is a great way to preserve wealth, but it is hard to move around. You do not need some kind of alternative. You do need some kind of alternative, and Bitcoin fits the bill. I'm not surprised to see that happening from an economist. Go to my next slide and see if either I'm disconnected or if it doesn't like the video. Okay, leave it and we see. Okay, yep, I should be in. Yep, I got it now. So, this is what I talked about, demystifying the terminology. You're going to get bombarded, as you can see here, with all these different terms that some of them you may have heard before, some of them you know, but not in the context of Bitcoin. And so we want to tackle, I'm not going to tackle all of these, but I'd like to tackle some of the fundamental ones to give kind of an idea, a fundamental understanding, and make analogies. I find is a good way to kind of start to take in the concepts. So I'll tackle a handful of definitions here. Decentralized, you'll hear a lot in the cryptocurrency space. One of the most fundamental properties. The best way to think of decentralized, or what we know is a fairly decentralized system. There's some nuance to it, but in general terms, the internet is decentralized. Decentralized just means there's no central authority. There's not a warehouse full of internet to bomb or seize. If you take down one node or terminal to the internet, access point to the internet, it doesn't affect everything else. There's multiple access points. And it's decentralized, another good word is distributed. So Bitcoin works in the same way, that it's distributed. There's no warehouse holding all the Bitcoins. There's not one computer. You take down one node that's connected to the internet, and Bitcoin is unfazed. And so, also, you'll find me using the term Bitcoin just naturally by instinct, but most of these concepts apply to most of the cryptocurrencies in general. So I kind of, as I'm speaking, I kind of use them interchangeably. Peer-to-peer is another term used a lot. Simplest way to think of peer-to-peer is we all know two very obvious examples of peer-to-peer. First is, if I hand you a $10 bill to pay for something, that's a peer-to-peer. It's not digital, but it's a peer-to-peer transaction. There's no other parties involved. I'm handing you a $10 bill, and that's one person to another, as opposed to swiping a credit card. There's up to 7 parties involved in a credit card transaction. When we wonder why our identities are getting stolen and why there's so much fraud in the credit card industry. The other example is you'll hear P2P, peer-to-peer, often used with the Napster model. We know what came out of the 90s and Napster, which created peer-to-peer file sharing. That was where, in the same sense, two computers are connecting together. When you are connecting and sharing files online, your node or computer is connecting to another computer, and you're transferring directly from yours to theirs without going through, again, that example of some warehouse full of MP3s. Open source. is also one of the most fundamental attributes of Bitcoin and cryptocurrency. What open source means is that all the code that powers the software and that is written to operate the software is open source, meaning the code, the raw code, is viewable by anyone. Now, I tell you, I can't read code, and so many smarter people in the world, since its inception, have been evaluating that code and auditing and analyzing that code for flaws, for that property of being open source. I kind of view it in a way, in a sense of, you think of an immune system. When it is constantly under attack, it develops resilience to attack and to think. And so by having not only people, the good guys, auditing the code and the bad guys trying to attack the code, this over time develops a more robust code base and resilient system. And in fact, the mere fact that cryptocurrencies and Bitcoin are still operating and still in existence is proof that there hasn't been a material, fundamental, hackable, breakable attempt at the code, or there have been issues with some cryptocurrencies, but the concept and Bitcoin itself is very resilient. Had it been attacked or successfully broken, it wouldn't have any value at all today. The confidence is based on its ability to do what it says it does. So, Bitcoin transactions and cryptocurrency transactions are what they call immutable. You hear the term immutable. Immutable just means once a transaction has taken place, there's no undoing it. Back to the $10 bill example, or the cash handing over example. If I hand over a $10 bill or pay for my food with cash, I'm not getting that money back unless I come back together with the merchant and we mutually agree, as in most situations occur, with your receipt, and you mutually agree to correct the situation or refund the money. Bitcoin is the same way, because it is a push transaction as opposed to a credit card transaction that's a pull transaction. It's immutable, but in addition to just the irreversible, immutable opens up opportunities for things beyond Bitcoin and cryptocurrency's use as a currency. Being immutable means you can use it for additional things, such as storing titles and deeds to a property or a car, and it can't be undone. In the US, we take it for granted. Most of our title ownership system is fairly modern, and you go to third world countries where the government can sweep in and take your land from you and take away your deed. That's a very different story. So Bitcoin being global is important because there are a lot of use cases that are out there beyond the US that this is going to have a much bigger impact on. A wallet, simply an application that you would install on your phone or your computer. A wallet contains your Bitcoins, ultimately. But really what a wallet contains is your private keys. And I believe private keys is public private keys might even be the next one here. But the wallet is just essentially, it's an application that you'll download and install to hold your cryptocurrency. So a wallet, like I said, holds public and private keys. What those are, in crypto speak, public-private keys are analogous to an email and a password. So if you have an email address and you want someone to send you an email, you can freely give them your email address without worrying with them being able to send from it. In fact, you have to. That is your receiving address. In order to send from that email address, you'd have to have a password, right? So your public key, private key is kind of analogous to that, where your public key is what you're going to give to the receiver to send to you. That's your address. And there is some nuance between the public key isn't technically, there's some not technically your address, but for the level of this discussion, I mean, it's pretty synonymous. And then your private key is essentially your password to be able to spend that money. Now, you don't have to memorize it like you do a password. It's stored in the wallet, secured and cryptographically secured, that when you ever send it, I mean, you can have password protected or PIN protected. That gives your ability to spend. So the public key is freely. You're able to hand out, and your private key obviously is secured and you don't show or give to anyone. Cold storage is a term you'll come across. It's just a very secure way to store your cryptocurrency. There's multiple ways and multiple apps, multiple services that are out there that you can get wallets from service providers or installing your own wallet. Cold storage is a way of taking your private key and keeping it offline. And so you'll find, like, I do some other classes I talk about, anytime you're holding a higher balance of Bitcoin or cryptocurrency, and that's subjective to a high amount of money or cryptocurrency is different for every person, but anything you would be upset about losing, you're going to want to have in some kind of cold storage device. Consider it long-term storage. So mining is one of the integral parts to kind of the whole ecosystem of cryptocurrency. Mining is connecting your computer to the internet and running very complex algorithms and math, trying to solve math problems. And this is the part, mining is where a lot of people tend to start to fade out in the conceptually. When I talk about mining to most people, I usually like to say, look, if I was going to try to sell you on the benefits of gold, most likely the last thing I'm going to tell you is to go get a pan, drive out to the middle of the forest or wherever, stick it in the river, and, you know, good luck. Hope it turns out okay. I'm going to say, no, go buy gold. Leave it to the professionals. So a lot of people enjoy mining for fun. It definitely is a good learning experience for people that are going into intermediate and higher levels and just want to wrap their heads around it more. But on a fundamental level, mining is a part of the process that is what cryptographically secures those transactions to make them immutable. So that's mining. Confirmations is an aspect of mining, but it is relevant to your day-to-day use of Bitcoin. You have a question?
I know you're on a roll.
Yeah, fine.
On the mining side of it, basically the system is doing the computation to create the security in the Bitcoin itself or whatever cryptocurrency. So what happens if you're working on the same one as someone else? Then you did all that work and they got there first.
Save that?
How does that
Yes,
work?
yeah. It's propagation, basically, right? Yeah, and an orphan. Orphan, right. Hang on to that for the Q&A, and we'll talk on that.
Okay.
When do I get my Lambo?
As soon as we hit moon. Confirmations are part of the mining process, but it is relevant to day-to-day use. Confirmation is essentially when you create a cryptocurrency transaction, you're sending one from the other. You're going to on both ends, you're going to immediately see that transaction is broadcast. So what you'll see is the sender is, within half a second most of the time, their phone's going to ding. They're going to hear it and see the balance. You can say either incoming or pending, something like that. So once it's broadcast, that signal propagates to all of the nodes very, very quickly. Okay, so at that moment, all of the computers around the world are seeing this transaction. It's not confirmed yet, in this sense. And so what happens is, approximately every 10 minutes with Bitcoin, there's different block times in different cryptocurrencies. But with Bitcoin, it's every 10 minutes, all of the broadcast transactions that were initiated in the prior 10 minutes, getting batched together in one big group, and that's what we call a block. That's the block part of the word blockchain. And then it gets added to the blockchain. And so the prior block contains all the transactions that occurred in the prior 10 minutes, and so on, and backwards all the way to the original first Genesis block that occurred on January 3rd, 2009. In order to undo those transactions, this touches on the immutable part. In order to undo the transactions that took place in your block, in the prior block, and so on, would take computing power that exceeds the computing power that went into solving the puzzle to build that block. There's astronomical numbers out there about how large the computing power is of it, but it far exceeds by 10, 20,000 times the most powerful supercomputer in the world. So collectively, all of this computational power that is constantly going into the network is what secures it. An altcoin is, very simply, any other coin besides Bitcoin. Any of the digital currencies or cryptocurrencies besides Bitcoin. Ethereum, Dash, Litecoin, yeah. I mean, there's new coins being launched literally every day. So an ICO is an initial coin offering, and it's analogous to an IPO, initial public offering. When a company goes public and they offer their stock for the first time, that date that they launch, here's our IPO date. ICO is just an initial coin, the date that they decide to go public with their coin, and you can start to buy those coins. Lastly, I leave blockchain for last on the definitions, because blockchain can be defined in so many different ways. The simplest is, as I kind of touched on it already, but it's simply a chain of blocks. And a block is a batch of transactions that gets added on a ledger, essentially is what it is. It's a ledger of transaction, simple accounting type concepts here. A ledger that says if I own such and such balance, I can transfer it to you. And because that ledger goes back to the very first transaction that ever took place, that's how we know I even have the Bitcoins that I'm attempting to send to you. So those are a lot of the important definitions. What are some of the other characteristics that make Bitcoin valuable or interesting? So Bitcoin and cryptocurrencies are digital. There is no physical coin. That's one of the first things you're going to come across. This is one of the first questions you usually get for people hearing about it for the first time. Bitcoin and cryptocurrencies are decentralized, but under the definition, there is no central authority. It's peer-to-peer, like we talked about. It is open source, so it is an auditable code base. There's limited supply. That's one thing we haven't really touched on yet, but it's one of the most important aspects of it. When I make the gold comparison, the reason we all know gold has values, several reasons, and we'll cover some of the characteristics of good money in a minute, but the fact that it's scarce is really, I think, is what relatable to most people. We understand you can't just create gold out of thin air. There's many other properties, but that is pretty much the fundamental one. And also, Danny also likes to point out that it's shiny, so that's definitely a very important property of gold. So shiny is the one property that Bitcoin doesn't have compared to gold. Huh? Yeah, that's true. In addition to that scarcity, it also has a predictable release schedule. When I talk about the 10-minute block time,
I'm your nightmare customer tonight.
that all of the transactions are batched together in a block. There's another thing that happens at the same moment, and it's kind of independent. I mean, they don't necessarily relate to each other, but it's all